Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Yesterday, the Australian dollar inked its lowest level since 2009 and posted a fresh low, as you can see here, from the long tail that we've got here to roughly around 66.77 as the low. The rejection is now seen as a Dragonfly Doji. A Dragonfly Doji is a type of candlestick pattern that can signal a potential reversal in price to the downside or the upside, depending on the price action. This being this long downtrend that we've had since the Australian dollar posted a high around 70-80 cents. The rejection of 66.77 low, along with the technical implications slightly improving only to the RSI, but we're still overheating and trending with the ADX, could stage a possible recovery because this candlestick is bullish. Now, what started the overall sell-off was yesterday that the Reserve Bank of New Zealand cut surprisingly its interest rate by 0.5% and dropping it now to 1%. The Reserve Bank of New Zealand, Adrian Orr, and his policy committee slashed the official cash rate unexpectedly, saying that the slowing economic growth prevents inflation from returning to the central bank's goals. It is quite a significant move and not expected, but the market plummeted and recovered as well. So let's see if this candlestick can come through. If so, then we are looking up towards 68.10 to 68.45 because we've seen a base, and also to note it was the bottom side of my range of 66.20.45, or my objective to more the point. So let's see if the bulls can come back today. Little to report on the euro as it maintains underneath the level of 112.7080, which I still see as a selling opportunity or supply zone. With the long-legged doji just in place from yesterday and the previous one, we've got two, does give indecisiveness to the upside. Therefore, we could see a drop from away from the 112.45 to 90 area and look back towards the recent test level of 111.7585. A break beneath there does give scope to 111.20. Although we have a hammer in place, I'm not fully sure that it's a strong signal. Because of the technical implications, I can't rule out another stage to the downside, at least today to 105.80. Look beneath there if breached to 104.45 with the resistance seen at 106.60.70. The market at present for the pound is going nowhere. It's still trading sideways as all the commotion around the world is moving around quite volatile, and the pound happily sits above 120.50.65. At present, the new UK Prime Minister Boris Johnson has pledged to leave the EU on the 31st, do or die, as he says, and with neither side seeming willing to give up any ground. That means to the EU nor to the UK. So until we get some fresh updates, we still remain sideways. But concerningly, if we do break 120.50, gives me a target of 116 to 119, which does sound quite dramatic. Look at these technicals though, they are improving a little, so we could see a small retracement. Gold surges again overnight and posts a fresh 6-year high of 1,510. At present, I'm neutral. Reason for the fact is because it's got to my target, and from that, which was 1,500 on the break of 1,455, that confirmed the move, is where do we go next? We are trending, but we are also in overbought territory, and a little bit to the fact is that we could see a pullback, but the pullback could find support around 1,488 to 92, but still could see a rise. A break above 1,520 gives me the next target to 1,560. Oil plummeted overnight and, as you can see, stabbed at this key level, which is around $51, and rebounded, or quite More to the point, it rejected the level. At present, though, we've still got a bit of work to do to the upside. If we can get above $53 a barrel, then this would give further scope to the upside. But unfortunately, at present, looking at the parabolic SARS and using the ADX, you can see the market's still very much holding to a bear case. So we're not quite out of it yet. Well, that wraps up for today. Thank you very much for joining me. And as always, look out for the intraday report. I hope you enjoy the great start to the new day.